The Monetary Policy Committee met on 3rd, 5th and 6th April 2023 and assessed the macroeconomic situation and its outlook. It decided unanimously to keep the policy repo rate unchanged at 6.5%. This is the first monetary policy statement of the new financial year 2023-24, and it is as follows. The year 2023 began on a promising note as supply conditions were improving, economic activity remained resilient, financial markets exuded greater optimism, and central banks were steering their economies towards a soft landing. In just about a few weeks during the month of March, this narrative has undergone a dramatic shift. The global economy is now witnessing a renewed phase of turbulence with fresh headwinds from the banking sector turmoil in some advanced economies. Bank failures and contagion risks have brought financial stability issues to the forefront. Given the stubbornness in inflation, central banks continue to tighten monetary policy, although at a reduced pace. Inflation globally has moderated in the recent months, but its descent to the target is proving to be long and arduous. The former chairman of the US Federal Reserve, Alan Greenspan, had once said, "Uncertainty is the defining characteristic of the monetary policy landscape." This he was saying in an era of great moderation and in more normal times compared to today's situation. What we are witnessing today is unprecedented uncertainty in geopolitics, economic activity, price pressures, and financial markets never seen before. Once again, one can imagine the magnitude of challenges central banks and other policymakers face in today's world. The Monetary Policy Committee met on 3rd, 5th and 6th April 2023 and assessed the macroeconomic situation and its outlook. It decided unanimously to keep the policy repo rate unchanged at 6.5% in this meeting with readiness to act should the situation so warrant. I would now like to explain the MPC's rationale for these decisions on the policy rate and the stance. While the recent high-frequency indicators suggest some improvement in global economic activity, the outlook is now tempered by additional downside risks from financial stability concerns. Headline inflation is moderating but remains well above the targets of central banks. These developments have led to heightened volatility in global financial markets as reflected in sizable two-way movements in bond yields. Fall in equity markets and the US dollar shedding its gains from its peak of September 2022. Amidst this volatility, the banking and non-banking financial service sectors in India remain healthy and financial markets have evolved in an orderly manner. Economic activity remains resilient and real GDP growth is expected to have been 7% in 22-23.